We're creating the Systemic Risk Council to make sure that financial reform gets done. The public needs to be protected. A lot of people were hurt as a result of the 2008 financial crisis. We want to make sure that never happens again. So there are really two reasons why reform isn't getting done. First, there's just relentless lobbying against good regulation. The second is that the process itself is a product of negotiations between a lot of different regulators. We have a group called the Financial Stability Oversight Council, which was mandated by Congress to facilitate and coordinate the rulemakings and make sure they're consistent and they're done on time and they're appropriately prioritized. But this FSOC group really hasn't exercised leadership, and they need to do so. One of our goals is to secure greater public support for financial reform. One of the reasons I think that public support is waning for financial reform is that some of the rules have been too complicated. They've been very difficult to explain, and there hasn't been a concerted communications strategy on the part of the regulatory community to explain them to the public. A lot of the financial services lobbyists come in and say that regulation will hurt the economy, it will hurt their ability to lend. I got to tell you, I wish they were doing more lending instead of taking flyers on credit default swaps and a lot of esoteric financial instruments. Maybe if we can tamp down the risk-taking there, they'll start making prudent loans again. That's the best way for banks to make money and to support the economy. The Systemic Risk Council will be successful if we get these rules done. I want to make sure that we never, ever have another 2008 financial crisis.